Hey everyone, welcome back to Corporate Decoder, the place where we unpack the business world. Sometimes the numbers tell a story you won't believe. Today we're diving into a report from Sculptor Diversified Real Estate Income Trust, Incorporated, a company that invests in real estate to generate income. We'll be looking at their recent filings to see how they have been performing and what their future might hold. Before we get into the nitty-gritty, if you love getting straight answers from corporate documents, hit that subscribe button and never miss another deep dive. We're also building a fantastic community over on Discord, so come join us, the link is in the description below. Alright, let's jump right in. This report details some very specific financial activities for Sculptor Diversified Real Estate Income Trust Incorporated as of the 30th of September 2025. They are reporting on some unregistered sales of equity securities and also some important distribution information. First up, let's talk about unregistered sales of equity securities. Essentially, this means the company sold shares of its stock, but did not go through the usual public registration process. This is often done under specific exemptions, which the company here claims fall under Section 4A2 of the Securities Act of 1933 Regulation D and Regulation S. This usually means the shares were sold to a limited number of sophisticated investors. On the 1st of October 2025, Sculptor Diversified Real Estate Income Trust Incorporated issued a significant number of shares based on their net asset value per S-share as of the 31st of August 2025. We see two main classes of shares here. Class E shares saw 552,450 shares issued for a gross amount of 6,176,228. Then there are Class AA shares with 678,905 shares issued, bringing in 7,377,575. In total, this amounts to over $12 million worth of shares issued in this particular transaction. Now, it is interesting to note that some of these shares Class E were actually used to pay Sculptor Advisors LLC for accrued management fees. This totaling $175,908 in shares shows how they are managing their operational costs. And for the Class AA shares, there were sales load fees of $47,575, which is basically a commission or fee associated with selling those shares. But the activity didn't stop there. On the 12th of September 2025, the company also issued shares through its distribution reinvestment plan. This plan allows shareholders to automatically reinvest their cash distributions back into more shares of the company. Here we see smaller amounts but across a wider variety of share classes. For example, Class E shares saw only 2467 shares issued for about 27,542. Class F shares had 136 shares for 1495. Class FF shares saw 22,625 shares for 244,732. Class AA shares had 21,759 shares for 235,497. Class A shares had 950 shares for 10146. And finally, Class IS shares had 299 shares for 3,180. The total here from the distribution reinvestment plan comes to about 522,592. One interesting detail here is that some Class E shares were issued as part of their independent director compensation plan. This means that the directors who oversee the company are compensated not just with cash but also with company stock. This is a common practice and can help align their interests with those of the shareholders. Now we move on to an important piece of information for investors: Regulation FD disclosure. This section relates to public announcements and ensures that significant news is shared with all investors at the same time. Here the company is announcing their September 2025 distributions. On the 30th of September 2025, they declared distributions for each class of their common stock. The gross distribution per S-share for most classes like Class EFA and IS was 0.0638. These classes had no distribution fees, meaning the net distribution was the same as the gross. However, for Class FF and Class AA shares, there was a slight distribution fee of 0.0044 per S-share. This resulted in a net distribution of 0.0594 for these classes. These net distributions are what stockholders will receive either in cash or reinvested back into shares if they are part of the distribution reinvestment plan. These distributions are payable to shareholders of record as of the close of business on the 30th of September 2025 and are expected to be paid around the 10th of October 2025. And that brings us to the end of the report with the signatures. Stephen Orbich, the Chief Executive Officer, signed off on this report on the 3rd of October 2025. Now, let's put on our analyst hat and look at what this all means for Sculptor Diversified Real Estate Income Trust Incorporated. The company is actively issuing new shares both through private placements and its distribution reinvestment plan. Issuing shares can be a way to raise capital for new investments or to manage payouts to advisors and directors. The fact that they use shares to pay management fees to Sculptor Advisors LLC is pretty standard in the industry, but it does mean that the compensation is directly tied to the company's performance and share value. Also, the distribution reinvestment plan shows a commitment to letting shareholders grow their holdings steadily over time. The distributions themselves, while modest at around 6 cents per share for most classes, appear consistent. In the world of real estate investment trusts, or REITs, consistent income generation is key. The slight difference in net distribution for Class FF and Class AA shares due to fees highlights that not all share classes are treated identically. There are often different fee structures based on investor type or investment amount. One thing to consider here is the unregistered sales of equity securities. While this often means deals done with sophisticated investors, it also means less public transparency compared to a registered offering. We have to trust the company's assertion that these sales comply with regulations. Looking at the overall picture, Sculptor Diversified Real Estate Income Trust Incorporated seems to be operating as expected for a REIT. They are issuing shares, managing their expenses through in part equity, and distributing income to shareholders. The total capital raised from these specific transactions isn't huge in the grand scheme of a real estate trust, but it shows consistent activity. A key thing investors watch with REITs is the quality of their underlying real estate assets and their ability to generate stable cash flow. This report doesn't give us that detailed asset level view, but it does show the mechanics of how they are managing their share structure and distributions. For strengths, the company demonstrates active management through its share issuance and distribution policies. For weaknesses, or rather areas for further investigation, we would need to understand the specific real estate assets backing these shares and the long-term strategy for growth. The reliance on management fee payments via shares could also be a point of scrutiny depending on performance. A clear conclusion from this report is that Sculptor Diversified Real Estate Income Trust Incorporated is continuing its operations by issuing securities for capital and compensation purposes, and by distributing income to its shareholders. The unregistered sales indicate a focus on private placements, which is a common strategy for such entities. Alright, that's our quick decode of this Sculptor Diversified Real Estate Income Trust Incorporated filing. What are your thoughts on these financial maneuvers? Do you think this strategy will pay off for investors? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more insights like this. And seriously, join our Discord community. It's a great place to chat about these filings. Thanks for watching, and we'll see you in the next one.